Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario where we have a 5-wave impulsive structure to the upside in a wave 1, look for a 3-wave corrective structure to the downside in 2, and then continuation to take the all-time high. The most common target for your wave 2 is the 05 to the 786 Fibonacci, taken from the low to the high of wave 1, giving you a target between 64.3k and 59.8k. We almost hit the 0.5, we just missed out, currently still ranging between the 382 and 05 area, which is an uncommon target area for a wave 2. Preferably, this wave 2 is also finishing after the 0.382 Fib time, taken from the low to the high of wave 1, which is sitting on the 21st of June. Because of time, it is interesting to also look for a bigger 3-wave corrective structure, after which we then look for continuation to the upside. And that bigger 3-wave structure can be a zigzag in a wave A, B, and a wave C. A zigzag is also a common structure inside a wave 2. What we are then looking for is a wave A in a diagonal, a 3-wave B towards the upside, and then an impulsive wave C to the downside in a 5-wave structure, 1, 2, 3, 4, 5. Inside wave A, we have a leading diagonal where all of the waves are 3-wave structures. So we have a 3-wave 1, 2, 3, 4, and then eventually a wave 5. Now this wave 5 here could be finished on the lower time frame. We clearly have a 3-wave structure to the downside. However, in all of the waves of a diagonal, we want to see zigzag family structures, which means that a simple zigzag could end a wave 5 and therefore wave A to look for a bigger bounce in a wave B. However, we can also still have a double zigzag in a W, look for a wave X, and then see another zigzag to the downside in a wave Y to then move up towards the upside. In a WXY double zigzag, we don't want wave X to move to the 0.7 at 66.5k, taken from the high to the low. If price does move to the upside and hits the 0.7, it will significantly reduce the probabilities for a double zigzag in a WXY, increasing the probabilities to look for price to move towards the upside. If we do move down once more, we don't want price to move towards the 61.9k area, which is the 1-to-1 trend-based fib extension taken from this high to this low to the high that we have over here, because a wave 5 should be shorter than a wave 3 in a contracting diagonal. After wave A, we're looking for price to move towards the upside in wave B. The common target area for B is between the 382 and the 886, taken from the start to the end of wave A, at least the low that we have at the moment, giving you a very big target area between 67.4 and 71.1k. And because of the size of wave B, it is going to be very important to look at the subwave structures to the upside, which should be corrective, but also to have additional resistance areas inside the target box for wave B. You can see the first area of resistance just below the 382 is this blue box here between 66.6k and 67.1k. Inside the wave B target area, we have another area 69.1 to 69.7k, the double top at 70.1k, and then close to the 886 between 70.8k and 71k, another blue box. In the bearish scenario, we're looking for a bigger flat structure where price also still takes the all-time high, but then moves towards the downside to take out the low at 56k, creating a fake out for an expanding flat wave B. In this scenario, we have a 3-wave A, 3-wave B, 5-wave C. Most common target for B is between the 1.236 and the 1.38 Fibonacci, taken from the start to the end of A, giving you a target between 77.9k and 80.4k. If price moves to the upside and touches the 1.618 at 84.6k, the probabilities will increase for continuation. Inside wave B, we look for a 3-wave corrective structure, and in this case a double zigzag in a wave W that is finished, looking for X, and then a wave Y to the upside. The common target for your wave X is between the 382 and the 618 Fibonacci, taken from the low to the high of W, giving you a target area between 66k and 62.4k. Once again, you don't want this wave X to touch the 0.7 as that would significantly reduce the probabilities for a double zigzag to the upside, with the 0.7 sitting at 61.1k. Inside this wave X, we are then looking for a flat structure at the moment, where we have a 3 wave A, 3 wave B, and then a diagonal, ending diagonal in a wave C. So A, B, C, common target for B in a regular flat has been hit, the 0.9 to the 105 Fibonacci, taken from the start to the end of A, and the common target for your wave C is between the 1 and the 1.618 trend-based fib extension, taken from the start to the end of A to the end of wave B. You can see we also hit the 1.236 here, which is a target for wave C. So we hit the common target area for a wave C, where then inside C we are looking for that same diagonal 1, 2, 3, 4, 5, the 0.7 on my chart once again to increase probabilities for price to move up, and the 1-to-1 as well over here on the chart. Now in this scenario, after a wave C, we want to see impulsive structures to the upside. So that is the big difference with the scenario being a zigzag, the bearish scenario here. Inside wave B, we want to see a corrective structure to the upside, while after a wave C, we want to see an impulsive structure to the upside to continue the trend towards the upside, and then a double zigzag ABC. So this is something that we have to pay close attention to. Locally, on the 15-minute time frame, price made a low and moved towards the upside and now starts to range sideways. Therefore, I have pulled a Fibonacci from the low to the current high that we have, and noticed that price did not yet retrace to the 0.382 Fibonacci, which generally is a minimum retracement target. Therefore, locally, it would be good to see price move to the downside, hit at least the 0.382, if not the more common target area being the 05 to the 786 between 65.2 and 64.8k, and then take it from there. On the daily time frame, we have now also lost the point of control of this range. This is the volume profile of the range that we've been in, the value area high acting as a very nice resistance, moving to the downside, hitting the point of control multiple times here, important support, but now we lost the point of control, retested it as a resistance, and moved towards the downside to take the low. Of course, for probabilities to increase for a bigger bounce to the upside, we now want to flip this point of control back to support at 66.9k. The value area low at 63.5k is important support, and it is also in confluence with some more support areas between 62.9 and 63.5k. Currently, price has found support on the top of the daily gap, and we've been talking about the daily gap, mentioning that usually when you hit a gap for the first time, you will see at least some support, and we have a bit of a move towards the upside, which is good to see. If we, however, close a daily candle inside the gap, it increases the probabilities for price to move towards the downside to 63.1k. Locally, we do have some divergences. We have a bullish CVD divergence, higher low on price, lower low on the CVD, where the target of this divergence is price taking out this high. Now we also know that this retracement so far is very shallow, as commonly we at least want the 0.382 to be touched, so it would be quite nice to eventually see price move to the downside, maintaining bullish CVD divergences, and preferably see more bullish CVD divergences building for a bit of a bounce to the upside. The move to the downside was also supported with bearish CVD divergences. First of all, on the 3-minute time frame identified during the live stream yesterday while price hit resistance, and then once more as we over here move towards the downside, increasing the probabilities for the drop to take out the lows. We have some news today as well, Tuesday, June 18th, 2:30 p.m. Central European Time, so make sure you trade safe around that hour. And if we then finally look at the probabilities of the different scenarios, then currently on the daily time frame, the probabilities are higher to take the all-time high before then possibly at a later stage 56k, but that depends on the reaction that we have once we then take the all-time high. On the number 2 spot, currently lower probabilities, it is taking a 56k first before the all-time high. For the probabilities of this scenario to increase, we need to at least lose 62k. On the 4-hour time frame, we're currently looking for a diagonal to the downside. There's lots of overlap in this structure to the downside from 72K, and this increases the probabilities for a potential diagonal here. If price locally can move to the upside and hit the 0.7 at 66.5k before making another low, it increases the probabilities for a move towards the upside. If price moves to the downside before touching the 0.7 and moves to 61.9k, then the diagonal scenario is invalidated. On the 15-minute time frame, price had a bit of a bounce towards the upside, and it would be good to see it retrace to at least the 382 and then look for some proof of support for a bit of a bigger bounce. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.